Hi, so today I'm going to be talking about Kingsway Financials, a stock that I've been looking at for probably 6 months now. The stock price has actually just ran up a lot recently, which is a really bad timing for this video. I wish I made this, a month ago. But anyway, still a really interesting company. Who knows what's going to happen in the stock price over the next 6 months? I have no idea. So good to do the work now and see whether we can get our head around what this business actually is, because I think there's a lot of potential here, and I really like it. So essentially, Kingsway Financial, the numbers, if you ever look on one of those like TIKRs or Yahoo Finance and look at the history, it's going to look really messy and ugly. It's because it was this old sort of legacy warranty insurance-y business that had all of these losses from like 2009 to 2017, a big section of losses there. And they've been able to keep those losses, which what that means is now moving forward, as the business is now definitely profitable and growing, they can use those losses to minimize their tax burden moving forward. It's a great asset to have, actually. So anyway, KFS or Kingsway Financial Services right now, and where they're moving to is to what's called a search fund. And this is a public markets search fund. Very unique. It's a type of serial acquirer that has solved a bottleneck that I'll talk about. So the bottleneck that I see in serial acquirers generally is that they find these great businesses, but it's difficult to find the really good people to run these businesses, right? So that's sort of the bottleneck, is finding these amazing CEOs who are going to be operators, who are going to run this thing long term. Tricky proposition. And what happens is you might find this amazing business, but the owner is looking to retire. Then you're having to figure out who's going to come in and replace that person. And you just want this amazing business and you just wish it could continue running. But unfortunately, there's people in the way. And how a search fund solves for this is it finds the hungry, smart, motivated operators first and pays them a base salary to go out and do the searching for the business. So you find the people first, find the business second. Very interesting a very interesting take on a serial acquirer. And search fund itself, it finds this like hungry operator, it pays them a base salary, they go out and search, and then that person is actually going to then step in as the operator and the CEO going forward. The search fund who funded that person, they're the ones who actually buy the company and then just put that searcher into the driver's seat. The searcher earns into the ownership as well of that business, and generally it's up to about 25% of the business. But remember, they didn't have to put any money up, and they actually even got paid to search. So for them to earn 25% of the equity into whatever business they're building or growing further, I think is a really good deal for them too. So a great win for both parties, I think. Maybe I'll talk about some numbers to like a bit of a hypothetical to make this make a little sense. So let's imagine we're a search fund and we think, Bob is exceptional and he wants to find a business and he wants to run it himself. He doesn't have millions of dollars saved up to go and buy a business for himself. So our search fund, we're going to back him, we're going to back Bob, and we're going to pay him $100,000 a year to go out and find a business to buy. We'll give him 2 years to do that. Now, Bob searches far and wide, and he finds, a plumbing business that he thinks is this awesome business that he can see a big vision for, and it has strong demand and a competitive advantage and even some recurring work. And the owner of that business, Bob, builds a relationship with him, and that owner is wanting to retire. And this plumbing business, we'll say, is doing $7 million in revenue. So it's a pretty big plumbing business, earning about $1 million a year in earnings. So the market rate for that business, making about $1 million a year, is say 5 times that $1 million, so about $5 million. Let's say that's what you'd have to pay for it to buy that business off the owner. Now the search fund, that's us. We're going to buy that business and Bob is going to then be the CEO. We'll work out all the details with Bob and the owner and make sure that the deal is probably going to be structured where we pay $2.5 million up front and the other $2.5 million over an earn out over a couple of years, something like that, let's say. So maybe we only have to put in $2.5 million into that deal anyway. Now, the first 2 years with Bob running things. It's, I don't know, revenue might grow only a little bit. Maybe it grows from 7 million to 8 million. And earnings might even actually drop. Now we call this the J curve, which Bob has to make quite a few changes. This business has been running the same for 30 years. It needs new IT systems. It needs a professional sales team. It needs more advanced and better dedicated customer service. It needs to hire some more people, maybe a HR person, maybe some other bits and pieces in the business. But now, after these 2 years, these foundational elements of the business are now in place. And because Bob is hungry and motivated to grow this, it's now ready. So with that sales team, out they go, they start growing and growing in the next 3 years. So now we're after 5 years in total. Bob's turned this into a really great business, and it might have only doubled in revenue. Okay, so let's say it's gone from 7 million to say now 15 million over those 5 years. So just a double, but the margins are going to be significantly better now. So maybe he's doing about 3 mil in earnings. Now in private equity, the private equity world, if this was a private equity play, what would happen is the private equity would want to, they would want to sell that business now, okay? Because they need returned money to their investors, because normally they have these 5-year cycles of investments, but not Kingsway Financial. Being a public company and being the structure that they are, they don't have to play by those private equity rules. Bob's just getting started anyway. So after another 5 years, so now we're after 10 years, and there's been a few add-on acquisitions. He's bought his competitors out. There's a geographic expansion. He's expanded in through the state. Bob's Plumbing has now hit $50 million in revenue and 10 million in earnings. Now that's not that far-fetched. It's 10 years to go from, 7 million at the start to 50 million with all of these 10 years to do that with a lot of support and motivation behind with Bob doing this. Now, that business, you're not going to put a 5 times multiple on that. It's more likely you're going to put a 10 times multiple on those earnings, because it is growing well, the foundations are all in place, and it's now a lot bigger. So making 10 million in earnings at 10x, probably 100 mil. Okay, that's the value of this business. So that's, initially, this was a $5 million business, and now it's a $100 million business. Bob has turned his efforts 25% of that 100 million. So he himself is probably sitting on about 25 million of equity. And then the search fund is probably sitting on the other 75 million. Now, of that 5 million at the start to get to the 75 million for the search fund, that's a 15x return over the 10 years, but it'd actually be better than that, because you're probably paying only that 2.5 million that I explained at the start. So 2.5 mil to 75 mil, what's that 30x return in 10 years? So this all sounds lovely, and this is a little bit hypothetical, but it's not that hypothetical. And what I mean by that is this has actually been studied for over 25 years now in great detail, and there is a pretty good data set out there. So since '96, the Center of Entrepreneur Studies at Stanford, at the Stanford Business School, conducted this study of search funds, and essentially what has happened over a long period of time here, that the historical returns for search funds that have been tracked by Stanford are at about 35% return per year. So that's the annualized return that that these search funds have been able to bring in. Now, even if you take out the top 3 best search funds out of this, because some of them hit some huge home runs, like 1000x's and stuff like that. So you knock off those top couple, you still get well over 30%. So search funds have had an amazing run, and it's one of probably the best vehicles I've ever found for investing. Now, this doesn't mean that every search fund is a winner. This is the average, remember, but that's still a very strong average. Kingsway Financial know these numbers, and they're trying to improve the probability of them being one of those successful search funds. So focusing on ways to do this is how they would improve. Looking at these PreDeal factors, so things like they don't want to have customer concentration in their businesses, they don't want to have poor industry growth, or highly levered balance sheets, low gross margins, super overly complex operations. And then there's the execution risk. That's like pre-deal and then post-deal. So execution risk, like the person that they put into the driver's seat, making sure that they really vet that person out and making sure they really choose well. They're onto something here. I think this is an amazing model. There are a lot of search funds out there, don't get me wrong. Now there is over 100 from the latest research that I've done of search funds, but they're all private businesses. You can't go in and invest in them unless you have serious money. So Kingsway being a public markets search fund, I think is an awesome way to play this, but there is competition in this search fund space. Point of difference is the fact that they're a publicly listed company, that they've got these big net operating losses from the past. They can make essentially things tax-free, which is pretty cool for the future for the business. Also, they have a pretty impressive board of directors here. They've got Thomas Joyce, who is the ex-CEO of Danaher. He's helped with a lot of the playbook here and how to run a good operation, Danaher being one of the best at that there's ever been. Will Thorndike's on the board as well. He's sort of the OG. I know everyone knows him from The Outsiders, the book, and then maybe Sun Mountain Partners. He's really the OG of this search fund model. He was one of the original people to back other people to go out and find companies, and he would invest with them, and he's probably done more search fund deals than anybody. So Will Thorndike's a great person to have on the board, very knowledgeable about search funds. And then Tyler is actually one of the original searchers in Kingsway, who has then sold in 2022 for a really big exit. I think they did at least 10x return in a pretty short period of time. And he's now one of the advisors helping the other searchers. So that's like really good hands-on experience there too. So a great board, I think that really helps a lot, attracting people who, imagine you've come out of uni and you've got an MBA, or you've had some years experience doing some things, but this is really this could really be a big step up to go into the CEO of a business that's got 20 or 30 people. Maybe it's a manufacturing company. Like, this could be really intimidating, and I think having some guidance and some really helpful people who have been there, done that in lots of different industries, I think that would be very valuable to a lot of searchers out there, rather than just going after the money from other PE. So I think that's a really good point of difference too. Now, there's a lot of reasons why people are looking to sell to people like our searcher, like our Bob, because the seller they're looking to retire, they don't have any succession planning in place, they want some sort of monetization event. Maybe they've got to feel like there's too much risk in this business. All of their life has been tied up in this business, and they'd love to take some of that off the table. Maybe it's just a little too small for everybody else to buy, or the other big private equity to chase. And our buyer, so our Bob, he's motivated, he's younger, he's got an MBA, talented, motivated. Maybe he doesn't have an MBA, but he's got just like this desire to go after this type of thing. He's learnt about this searching community and being a searcher, and this is what he wants to do for his career, and it really matches these two people together, which is I think really cool. And remember, you're taking a business that was like a lifestyle business for somebody. They're getting close to retirement. They're probably doing their own sales calls. There's probably a lot of pen and paper going on. They like to keep it close to home, paying themselves big dividends, things like that. And then you give it to somebody who's motivated, wants to put a professional team in place, better technology and systems, wants to grow regionally, wants to just invest and plow all that money back into growth. I think that's how you turn these businesses that have been sitting around for 30 years, and you can then really grow them further. And that's the idea. Essentially, there's a lot of small businesses out there, these sort of boomers who are all hitting retirement age, and what's going to happen to all these businesses? So they're either going to give them to their kids, or they have to sell them to someone. So yeah, there's a lot of businesses hitting the market. It's going to be good for people who are looking to buy. Kingsway try to sum up their advantages. I'll just read them off the screen here. So like, they've got a strong track record now. They've done since 2019 now. They've got this infrastructure and support. The disciplined investing criteria, I'll show you that now too. So they're looking for a high percentage of recurring revenue, this capital light, non-cyclical businesses. They're operating in a fragmented industry. It's growing. low customer concentration, high margins, long history, all the stuff you'd look for in a business essentially if you're going to buy one. They're not really that different to any other search fund or myself looking for a business to buy. Looking for top quality talent, access to debt, and having this permanent equity structure, being a public company, and this tax advantage structure. It's all really positive stuff for Kingsway. You can look into that in your own time. Let me summarize my own thoughts now, and this is what I wrote in my Discord community. There's a link in the description for this, by the way, and you can also get Kingsway on Interactive Brokers for those who are interested in investing in this one. The link in description for that as well. Now, I'll read what I said on Discord for this. Kingsway I would sum up as it's a movement of this idea called ETA. It's entrepreneur through acquisition. And it's this idea that the Western world is aging and many small businesses are going to be changing hands and they're going to have succession issues. And most people, like myself, don't have millions of dollars to go out and buy one of these businesses. So I could go into a lot of debt. I could mortgage the house, put in big personal guarantees with banks, or debt myself to my teeth, or I could find investors and partners. So for a hungry, motivated, smart person early in their career, these options can be actually pretty difficult. Now, ETA, this is taught at actually the big universities, Harvard, Stanford, stuff like that. It's spreading throughout the universities of the United States, and it's becoming more and more popular. Kingsway have direct ties with Harvard and Stanford and a few others as well. They get these hundreds of graduating MBAs. They apply to Kingsway, and at Kingsway get to sort of pick out the best of that bunch, who are, they think, are the most motivated and will do the best job. And the thing that I really like is just that idea that the bottleneck that normal serial acquirers have is the person going to run these businesses. I think Kingsway have solved for this. So I like this, that Kingsway have decentralized their deal flow. These operators in residence is what they call them. They don't have to do the searching for the business themselves. They get the searchers to search for the businesses themselves. They just got to find those people. And the operators get to choose the business that they want. So they already find the fit for themselves. It's like they're the ones bringing the idea to Kingsway. Kingsway can then scale by just getting more operators, these more operators in residence on their books. I think that's an easier way to scale than serial acquirers. What I don't love about the model is that these operators in residence, yeah, they're smart and motivated and hungry. I've said that a million times, but they're often inexperienced in the industry that they're going into. Kingsway going to have to provide a lot of guidance and support and help for these people, because there's going to be a steep learning curve, and that's probably the concern that I would have. Can they get out of that J curve? So yeah, they make all these investments, but can they actually get out the other side? So far so good, but it only would take one or two of these to not go the right way for this to not hit the return targets that we would be looking for. All right, so that's Kingsway Financial. I hope you enjoyed. It's something that I find, really interesting, as you can tell. And if you have any questions or thoughts about this one, leave them in the comments, and I'll see you in the next video.